Hi, everyone. Welcome to the podcast. Glad to be back in the podcast business with the third episode of the new podcast, The Robert Bryce Show. And I'm pleased to welcome a new friend of mine, a new acquaintance. Her name is Lisa Reisman. She is the founder and CEO of MetalMiner, a metal price forecasting company. Lisa, welcome to the podcast. Glad to have you.
Thank you so much, Robert. Great to be here. Didn't realize I was the guest number 3 for the third show.
Yeah.
Awesome.
So you may be wondering about why I'm having a metals person on the podcast. And so Lisa, I'm going to ask her to introduce herself and then about CEO and founder of MetalMiner. But why are metals so important to the energy and power sector? So Lisa, imagine you've just met someone. You don't know anything about them. They don't know anything about you. You have a minute to introduce yourself. Please introduce yourself.
Appreciate that. And then I'll come back to how I found you, Robert. But so MetalMiner is a metal price company and a forecasting service, if you will. I think the two things we do a little bit differently than probably many others in the landscape. The first one is we provide original equipment manufacturers, OEMs, a more detailed, granular price for the materials that they're actually buying. And I know, Robert, we're going to get into some of those materials, but typically at the form, alloy grade, sometimes even the size level. And then on top of that, I think the other piece that we're known for is the way we look at markets from a forecast perspective. We do not merely look at supply and demand or what most people call fundamentals. We look at data. We actually look more like hedge funds and traders might look at data, looking at the price action. We've got lots to unpack here because there are a lot of things impacting price now and a lot of things that are sort of what I call event-based things that happen to the price. And we'll get into some of that. But Robert, really, I found you through our, we track so many different metals, and a lot of those metals are used in the energy sector. And I felt that I needed to get a little more intelligent on just the different, energy sources, just the coverage of what's happening in energy markets and all of sort of the clean tech revolution and what that actually means and looks like. And so stumbled onto your work, and it's been really helpful to me and just learning more about the energy markets.
Sure. Well, and that's how we became acquainted, just to underscore that one, via Substack. And I wrote a piece on China and the export bans on antimony, gallium, and germanium. And then you posted a comment there, and we had an exchange. And then I followed up we talked on the phone the other day, or actually on Zoom, I guess. But tell me just a little bit more about MetalMiner. You're now in the metals business, but that's something of a new business for you. You haven't always been a metals person. Tell me a little bit more about your background, if you don't mind.
Yeah, great question. I appreciate it. I actually started as an aluminum trader. So, and I have been in the aluminum industry since, I won't tell you when, but it's multiple decades.
Okay.
And I wanted to do something international. I had a passion for international business. But then, so I worked for an aluminum trader, and I might have told this story. It's a kind of a scandalous story, but worked for a trader who had studied under a Fibro trader, who studied under Mark Rich.
Uh-huh.
And so kind of like...
And Mark Rich was the well, I don't know, how do I describe it? An industrialist. He was friends with Bill Clinton. Bill Clinton issued him a pardon on Clinton's way out the door. Rich, he wasn't with Glencore? What was his company?
He founded Glencore, that's right.
Oh, he founded Glencore. Okay, right.
Yes.
And then he was convicted of multiple crimes on insider trading, tax evasion. Okay, gotcha. So then you traded aluminum for what company where did you work doing that?
A company called Cometco. There's a lot of scandal. I used to have a funny bio on my website that talked about this background, but essentially worked for a trader and learned the business of trading. Unfortunately, I also learned I learned how people cheat, steal. I learned what transshipping was, or people moving goods through third parties in other locations to avoid duties, tariffs, et cetera.
Right.
A lot of useful information, to be honest with you. But then I decided I would, maybe I need to do something a little more on the up and up. So I began.
my first book was on Enron. So
there you go.
You're in a
okay. So where did I go next? What a great question, Robert. Where did I go next?
Yeah.
I went to Arthur Andersen.
Ah, nice. Yeah, well done.
Of Enron fame. So.
Yes.
There you go. Actually, there's a funny story behind that, but somebody had snapped a photo of me from the Chicago Tribune leaving the Arthur Andersen headquarters during the Enron scandal. And I was carrying with me binders and boxes. It was training materials, but they snapped the photo. And the next day there was like a headline, Anderson rocked by scandal. And the implication as I was taking documents out. So anyway.
Right. Straight to the shredder. So when you say OEM, so just back to MetalMiner, because I think all of this is really interesting. And we, again, I want to talk about China here in just a moment, but when you say your customers are OEM, so auto manufacturers then, is that right?
No, original equipment manufacturers. So our clients cut across multiple different sectors.
Oh, okay. All right.
So we have a lot in transportation, industrial appliances and equipment. We have a number that are in the energy markets themselves, whether they're producing solar panels, wind towers, a little in oil and gas, and kind of a lot in the construction sectors. So we kind of cut across basically any company that's manufacturing using multiple metals is somebody that we can serve, from being we have some clients that are 15 million in revenue to clients that are north of 50 billion in revenue, and kind of everything in between. So
gotcha. So then it's the buyers that you're giving price to. Why not the miners? Why wouldn't the miners be interested in what you're doing? Or is it all because you're further downstream on the value chain? Is that why it's not?
That's exactly right. And so we're not modeling, except with a couple of projects they're working on right now, but we don't model the extractive and the refining costs of the folks in that part of the supply chain.
Gotcha.
Yeah. So the analogy I use, just to kind of make clear what if you think about, Ford, they, on their F-150, they're putting 5052 aluminum semi-finished material. They are not putting an aluminum ingot on their truck, right? So we're giving the pricing for that 5052. And that's kind of what we look at and forecast for. And that's why we're down at the OEM level.
So if 5052, I'm sorry, what does that mean?
It's an aluminum alloy.
An aluminum alloy. So you're giving them a price on that as a sheet of aluminum, or in what format? Right. What form of the? I see. Okay.
Coil and sheet. That's right. Absolutely right.
Got it. So let's talk about China, because I'm just listened this morning to the IEA's coal market report and their webinar. And when you're talking about coal, it's all about China. But when you're talking about nearly any commodity, as far as I can tell, it's a China story. But this is particularly true when it comes to metals, and particularly strategic elements. And that's why I wrote about, that's how we connected on the export ban on antimony, gallium, and germanium. But what about that? We talked again just a few days ago and agreed to do this episode. And you talked about China's dominance and its ability to manipulate the markets for different types of commodities, rare earth elements, et cetera. So the question I have now with this export ban on antimony, how does the U.S., how does the West respond to China's dominance? And I guess the shortest question is, how should the U.S. respond? And can it, if we start mining antimony, start producing gallium, germanium, what's China going to do in response?
Right. So there's a lot of questions in there. Maybe we'll unpack a few pieces, but let's sidebar real quick and just kind of go back in time and talk about China as a commodity giant and sort of its evolution in the metal space, because I think it's changed over time. So there's no question that since, China entered the WTO in 2001, China became two things: the most dominant producer of many metals, and of course, the most dominant consumer, which is a really interesting, so they literally own both sides of the supply and demand equation. And so for the first time in, I would say, most history for a lot of metals, China's rising economic power ended up fueling and creating a lot of the price volatility that we saw in many of the metals but never before had price volatility. My favorite example is just using steel, hot rolled coil, plain generic hot rolled coil. If you were a trader from the 1980s through to 2000, 2003, you would see that the price of steel essentially was about, probably people are going to argue with me, $350, $400 a ton, plus or minus a little bit.
Okay.
Once China came to the table and came to the stage, then the voracious appetite started increasing as they were starting to grow in double-digit GDP terms. So what happened was a lot of investment in creating all sorts of capacity. Of course, their demand was growing too, but their capacity was more than their demand, and so they became an export powerhouse, right? So that's kind of the story. So when I go back and I look at the history of metals, and you look at like steel and aluminum, those two commodities, stainless steel too, we can argue, the advent of China's growth is what spurred all of this price volatility in markets. And so anybody that came into the profession in 2004 doesn't know anything but volatility. Some of us who came before that remember days when, the price was very flat and stable. So I'll start by saying that dynamic is what sort of lay the groundwork for the impact that China had in rare earths and some of the other metals that it went after. So we study the behavior, the price action of all of these, what I call exchange traded, or let's call them more liquid contracts or materials like hot rolled coil, or even some of the more, some of the different strains of that cold rolled coil, hot dip galvanized. But there's still kind of what I call widely traded metals, and price discovery is an easy thing to do. That's not the case for a lot of other metals, and we'll get to the whole clean tech has kind of impacted that. So
Sure.
as China, grew in economic strength, as it became a more dominant player, from a consumption standpoint, but also as it started entering into these other areas where they weren't before, particularly around, aerospace and defense, their automotive industry. We're talking massive transformation. We won't get into all the details of how they got a lot of that, but basically in the mid twos, maybe 2010, not, quite a while ago, the Chinese government began to realize, exactly where it could create strategic competitive advantage and which markets it was going to own well in advance. And I'm sure you probably have some perspectives on where that went in terms of energy markets and what things it was going to own. But it was going to own the solar panel industry, it was going to own EVs, et cetera. And so, they were very, 15 years ago telling us that rare earths are the new oil of China. And because nearly all rare earths and a lot of other, I call them the obscure metals, if you will, the ones that are not very liquid, where there's not a whole bunch of players in the marketplace, China became the dominant player. But they started planning for it in 2010, and if not even earlier than that, in part of their 5-year plenary session kind of documents. And so now coming back to the original question you asked, which is, how do they control the price? Well, if you want to own a market and you're the monopoly supplier, essentially, you can tank the price on everything in order to drive out all the competition and own the market. And it's kind of when you're a monopoly power, you have, you get that option to do that, right? And that's essentially what China's done for some of these more obscure metals. And they know that, for example, antimony is really critical for lead acid batteries. It's also used in a ton of aerospace and defense applications and US weapons systems and all of that. They knew this, and that's how they've been able to control it. Then you asked, okay, then go ahead if you want to.
Well, so just to, I'll just interject this one point. I think it was 1992 when Deng Xiaoping said, the Middle East has oil, we have rare earth elements, we're going to play in, I don't have the direct quote, I have it in my piece on Substack the other day, but this is the result. We are now living in a market that was foreseen by Deng Xiaoping now more than 30 years ago. And your point is that actually this is something that China has then developed really since joining the WTO, where it saw it could have strategic competitive advantage. And meanwhile, here in the U.S., if I would typify how the U.S. has been, the market's going to take care of everything. And the Chinese have, in their view, are saying, well, okay, sure, you can believe that if you want, but we're going to own the market and we'll manipulate it however we like. So we make sure that we maintain either a monopoly or near monopoly. And they definitely have that when it comes to neodymium iron boron magnets, as well as all of the rare earths, and particularly dysprosium and terbium, which are irreplaceable when it comes to those magnets.
That's right.
I just wanted to interject that because I think your point there about them having that ability to tank the market at their will, I think we've already seen that in rare earths and the development
Sure.
of the Mountain Pass mine in California, which it was owned by Chevron, then it was owned by Molycorp. Molycorp tried to make a go of it. They failed because the price of the rare earths was suddenly fell through the floor. Now it's owned by a different company, I think, called MP Materials, but still they have to ship their ore to China. So even if we're producing some ore here, it doesn't mean we are independent of the Chinese for any of that marketplace.
That's correct. That's correct. And I think that's changing. And I think the US government is doing, I think there's a lot of initiatives the US government has taken to try and help support this industry, because I don't think there's, even if don't have an EV mandate, or EVs don't become the dominant, there's a lot of other technologies that are going to require a lot of these materials.
Right.
So the cat's out of the bag there, if you will. I do see a number of things, though, happening that I think are, I mean, look, the other thing is a cultural difference, right? Americans are, by nature, we're more focused on quarterly earnings. We're not as long-term strategic thinking. And yes, to your point, the market will, care for all. I remember when you think about the first rare earth panic, let's say, was in the 2008, 2009 slash to 2012 time period. And at that time, we created a series of indexes that track the markets. And now we have, a lot of years of history of those markets. And essentially what we would do is we'd create a basket of metals, and we would track their price changes month over month, which is basically how the Department of Labor does the producer price index. So we've had a rare earth index for all these years, 14 years or 12 years. And I will tell you right now, the rare earth metals basket is the worst performing of all of the metals. In other words, all our metal categories started with an index at 100
Right.
back in 2012, and the rare earth index, I think, is at 28 or 29. It's the worst performing of literally stainless, every type of metal. And that speaks to the power of China's monopoly. But I think the US is, I mean, look, we're out in Africa looking for, trying to create, there's a lot of things the Americans can offer as an alternative and as a competitor to what China's doing. Look, China's going into Africa. They're buying up and building infrastructure. They're buying up mines. They're doing joint ventures, but they're also stripping away a lot of the land. They're not helping the local populations as much as they can. There are things that the Americans can strategically offer too, and help get some of that supply allocated, or let's say rebalanced, such that the Americans have the opportunity to source some of those ores from, for example, places like the Congo. And I think our U.S. government is there trying to develop initiatives to do that. That's one piece. The second piece is I see a lot in the finance side, where the U.S. government is working with, whether it's the Department of Energy and other, Exim import banks, other finance arms of the U.S. government, to help support, some of the transactions and, loan structures, if you will, and working with companies also in the U.S. that are mining to create, financial packages that create good incentives to produce here. But I think what we're going to learn, if this hasn't been really out there, is that we may need to have government support those industries on a more long-term basis. There's other ways to do that. You can do offtake agreements, for example, and have the federal government do offtake agreements for the strategic stockpile.
Right.
So there's a lot of different, let's say there's probably half a dozen buckets of things the United States can do to kind of allay some of what we're doing, with just trying to build this all ourselves. But there's also friendshoring. I think we talked about that, and your
Yeah.
article talked about alternative sources. That's a huge thing. Weapons, I should say, aerospace and defense contractors have access to different offtake and offsets, government offsets that they can use, and they can use and deploy those offsets. And I don't know a lot of details. I'm not an expert in that, but they can use those offsets as financial incentives to work in alternative locations and geographies where we
Right.
can friendshore.
Yeah.
Um,
But you said, but the key word there was the, long term. And that to
yeah,
me is something that I mean, the Chinese obviously, as we've been discussing, have taken a very much of a long term view on all of this. It's a problem in the U.S. We don't think of that, as you said. We think in these quarterly earnings outlooks and getting that kind of long-term governmental support. I agree. I think it's going to be absolutely essential, particularly for the uranium, where we're almost 100% dependent on imports. 27% of the nuclear fuel in the U.S. comes from Russia. Russia's not our friend. We know this now. Probably have known it for a long time. Mitt Romney said they were not our friend a long time ago, and people laughed at him. Well, okay, well, let's get serious. But that long-term issue is going to be one that I think is going to be the challenge because, as you said, then China, if the U.S. invests heavily in one or another of these markets for antimony, and I think we're reopening one antimony mine, but they can also then manipulate the market to their, as much as they like, and so that's going to be something then that would have to be understood from the outset. No.
for sure. That's definitely a piece of it. I think the other thing that probably needs to be discussed is the notion of how materials are often co-mined. So,
Yeah.
sometimes we get something we need as a byproduct of, zinc has some great, and I can't remember them all off the top of my head, but, how do you create markets for the items that are co-mined, where
Yeah.
maybe the price of something is tanked for the thing that we need, but we're able to create some alternative markets. A lot of these rare earths are also, gold is co-mined with some of these. So
Right.
if we don't look at the things that have lesser value and are only focused on the most, advantageous thing, I mean, obviously gold is pretty profitable now for companies to mine that based on where the gold price is, but to have alternative, support structures in place to encourage the mining of some of these other materials, I think that can also be a strategy. And then the one that I think that will happen with the Trump administration is we are going to see reform for permitting.
Um,
That permitting issue, I think people have no idea. I mean, it's at least 7+ years, assuming you have no environmental, I mean, you've seen this in energy markets, in metals markets, it's terrible. So waiting for that to happen, you know, taking away those bottlenecks, I think will be also really, really critical.
sure.
Um,
Let's talk about Germany because that was one of the other things that you mentioned before we started recording, the deindustrialization of Germany. And I've written about Germany many times. If I were a better person, I'd feel sorry for Germany. I don't. They did it to themselves. So good luck. You drove yourself into the ditch. I hope you like it there. But what does this mean? You specifically mentioned copper tubing, that Germany is a big supplier of metals, but a lot of these industrial giants are leaving Germany and looking for other places. A lot of them are coming to the U.S. Gulf Coast. Some are going to China, elsewhere. What does the German deindustrialization mean for the metals business and for the U.S. in particular?
That's a good question. First of all, I've learned a lot from just what you've reported on in Germany. I find that information really interesting. The deindustrialization is happening in a pretty massive way. When your cost structure is too high to continue your operations, you are, that's the process of the deindustrialization. We're seeing that in a huge way for things like zinc, but even for copper. And here's the thing, Germany is you know, a friendly nation, ITAR compliant, aerospace and defense supplier of key industrial products for which the quality is impeccable. And there aren't a lot of good alternatives for that. And so that's creating additional, so that has nothing to do with China, right? But that's creating additional supply risk for industries here in the US that rely on that high quality copper tubing. So you are seeing now those kinds of companies, Arubis move to the US or find companies to partner with and to sell on through. I mean, look, Germany is considered a very high quality, a high cost, high quality supplier, but in some of these more technical applications, not having them as a player is also impacting the supply chain in a big way. So I think
So,
that's
so you mentioned ITAR, so I just looked it up. International Traffic in Arms Regulations, the rules that control the export and import of defense-related items. That's an acronym I wasn't familiar with. So if I didn't know it, I'm assuming some other people probably didn't know it as well. ITAR compliant, which means they're part of our defense bloc. They're a friendly nation. We can trust them when it comes to these kinds of defense technologies.
That's right. That's right. So you might have some pain in the sort of the headline germanium and antimony and gallium and that kind of, but there's also what I call, more common types of materials that are also facing significant supply risk.
Right.
So, we're watching that.
That are strategic both for industry broadly and particularly for the DoD and defense in specific.
Correct. Correct.
Yeah.
So
So
that's
let's talk about Nippon Steel. This is another issue where we have an ally, Japan, looking to Nippon Steel looking to take over U.S. Steel, and this is something I've been interested in for a while. My brother Wally trades stocks, and he said a long time ago, buy U.S. Steel. It was a price-to-earnings ratio of 1. The price went up dramatically. It became a takeover target. Nippon said they wanted to buy them, and now Trump is saying, well, maybe not so fast. And I think the Trump administration or the Biden administration has said not so fast. You and your comment on my Substack now several days ago, you said the U.S. should allow that merger to happen or that takeover to happen. Why are you in favor of the takeover?
Yeah. By the way, there's a lot of internal debate in our company about that takeover and whether or not it should or will, rather, what will it happen? So here's the thing. I listened to an interesting, the Call Me Back podcast had Rahm Emanuel, who is our ambassador to Japan under the Biden administration. Fascinating interview. And Rahm really made the case for why we are working so closely with Japan right now and why Japan is so critical to our, security paradigm in that Southeast Asian region as
Right.
in general. And we're doing a lot. I mean, I don't know if people know this. We are doing massive military exercises with Japan right now. They are buying huge quantities of systems from our, weapons and defense supply chains, if you will. We want them to have more power. We need them as a counterbalance to China in that region. And there's a lot of, between us and Japan, we're bringing in some of the other nations of that region. So, in my view, Japan is probably our number one most strategic ally. I'm going to talk about alloys in a second. One of our most strategic allies in the region, and that's why I think, okay, now so that's Japan. That's the importance of Japan. If we're doing joint military exercises with them, we are selling them state-of-the-art weapon systems. We are working with them to try to create kind of a wall against China. It behooves us to, why are we stopping this deal is the question. So is there a CIFIS, CFI US, I think, or CFC IUS? That's essentially whether or not there's a conflict of interest with them from a national security perspective in terms
Okay.
of Nippon acquiring U.S. Steel. I don't think a CIFIS, I think is the acronym. I don't think there's a conflict, to be honest, particularly because of what I've just spoken about in terms of what we're selling to that region or to Japan in particular.
Right.
Now, let's talk more specifically about Nippon Steel. Nippon Steel is a super high quality producer of some of the more, let's call it nuanced, high performing steels that are really heavily used in the energy sector in particular, but also for some aerospace applications, automotive applications, et cetera. They are, they've promised to bring really great technology for which U.S. Steel has underinvested. and doesn't have some of the same capability, let's just say. And so, for
So
example,
sorry to interrupt. So that'd be goes and knows then? Is that where you're talking
yes,
about
that's
specifically?
exactly
Maybe
right.
jumping ahead. Okay.
Yep. Not to mention other things, tin plate, different grades of some of the more exotic electrical steels, et cetera. So there's a lot of good.
So GOES is grain-oriented electrical steel, and NOES, NOES, is non-oriented electrical steel, and these are used in transformers, electric transformers. And this has been a big issue lately because the Department of Energy has issued new mandates requiring increased efficiency in transformers that requires
Right.
not just GOES, but it requires NOES. And there's only one domestic supplier, Cleveland-Cliffs. Is that right?
That's right. That's right. Big River Steel, which is now owned by U.S. Steel, does have a nose line that I haven't checked if it's. I think it is operational. I just don't know how much they're producing and how much if their materials have all been kind of qualified by buying organizations, et cetera. So, here you have, and by the way, we import certain grades of grain-oriented electrical steel that, I mean, some will argue in the US that only can be found from the Japanese producers, both JFE and Nippon.
Uh-huh.
Um, and, Nippon, or rather, the Japanese companies are the largest exporters. If you look at grain-oriented electrical steel imports in the United States, by far and away, Japan is the biggest supplier, far and away.
Uh-huh. So if Nippon bought U.S. Steel, we could bring some of that manufacturing here then, and then avoid the tariffs on that. I mean, that's the key issue here, right? The tariffs on this goes and knows that is used in electric vehicles, transformers. It's used in defense applications. I know it's a very, but it's difficult to make. It's very high tech steel.
Exactly, exactly. But also it would help, and am tend to be I tend to be market based, so I do like when there's competition for things. So,
Sure.
I think it's been a struggle for companies to have only one monopoly supplier of GOES here in the United States. So, who also, by the way, made a run for the U.S. Steel. I'm talking about Cliffs,
Right.
Cleveland Cliffs, who did that. So, I don't think there's actually a national security conflict or reason for us to block the Nippon deal.
Uh-huh.
I think it's coming down to politics. I think both groups, both the Democrats in the run up to the election, or everyone's trying to appease the same set of union workers and voters, and so I think it's been politically expedient to ban or to say that you're opposed to the deal, but there isn't a logical reason. And by the way, I think more of the industry, and again, because we're more focused on original equipment manufacturers, I think what's best for the marketplace is to have multiple suppliers of that material in the US. And I think
Sure.
all of the OEMs would support me and would want to see that go through versus Cliffs having acquired US Steel, which would have, I think, further shored up their monopoly and created only one blast furnace producer in the US. So, or,
Right.
one primary blast furnace producer in the US. So,
So
um,
Cleveland Cliffs, by the way, is steel producer, obviously based in Cleveland, but it was they have been playing the politics on this hard, right? Arguing that the Nippon takeover shouldn't happen, right? It's pretty cynical, but this is the way the game is played these days.
100%. And they've a lot of money in their lobbying to, get folks to kind of over on their side. And they still may win in this in terms of being able to scuttle the deal. They won't probably get it either, or even
Right.
if they made a run for it. And I think from that perspective, especially because they just acquired Algoma in Canada. So that's going to make, when you look at that from a competitive landscape perspective, that probably should get stopped by antitrust authorities, but we'll see.
And they acquired, I'm sorry, who did they acquire in Canada?
Algoma Steel, which is another steel producer that supplies the automotive market here.
Okay. Gotcha.
So, that's again creating fewer choices for original equipment manufacturers here in the US from a steel perspective. So, I mean, there's
Right.
still obviously there's the mini mills, right? The electric arc furnace producers, but for those that need certain grades and quality of material that only come from blast production making, I think having Nippon here keeps the market at least, with two players and then the old ArcelorMittal still has some capability as well. But
Right.
I'm not a fan of monopolies.
Sure. Well, not nor am I. But let's talk about that blast furnace thing because I'm glad you brought that up because Port Talbot, the famous steelworks in Wales, just closed their last blast furnace in September. And I talked about this with Matt Ridley on the first episode of the Robert Bryce Show a few weeks ago. And this seems to me to be the beginning of the end of the industrial age in Britain, right? That made its history as one of the leaders of the Industrial Revolution. And a blast furnace means you can create steel from virgin materials, right? You mentioned mini mills;
Right.
those
That's right.
those are mainly recycling steel
Correct.
and turning it into other products. But if you're going to be an industrial power, as I understand it, and correct me if I'm wrong, if you don't have a blast furnace, you're really not in the game because you have to be able to create the kind of steel you want from the iron ore using met coal, if I'm correct here, to create that grade of steel, whatever the recipe is. So I guess I've given my view on it. One, am I reading it right? And how important is the blast furnace to the overall steel industry and the competitiveness of the U.S.?
A great question. I think you'd find people that would argue that point all different directions. The EAFs might think it's not so significant.
Sorry, EAFs?
Sorry, the electric arc furnace producers, the Nucors
Okay,
and SDIs of the
right,
world might not think that
right.
that there's not much that they can't do. And I think that statement is true. I think there's less and less of what a U.S. Steel or an ArcelorMittal, but there are still you think about some of the lightweighting that's gone on in the automotive industry and the ultra high strength steels. I mean, still a lot of it is dominated by blast production processes, the virgin material, as you're describing. And there are some other national security implications, some of the armored plates and some of the
Yeah,
other kind of materials that are used in the defense industry come from blast furnace. Some also come from the electric arc furnace production making, but there are still some defense and I would argue automotive applications that are still more on the blast side. So,
sure.
from national security perspective, I think it's important that we preserve both, and both are in needing of. I mean, Cliffs has upgraded a lot of what they've acquired from ArcelorMittal and some of these old plants. I actually sit in Gary between U.S. Steel and Cliffs, works in Burns Harbor here. So, but I think there are. It is part of our national security. It's also a lot of the materials, the oil country tubular goods are used in oil applications, and those
Right.
materials are also produced here with these blast furnace, production processes. So, I think as a nation, I think it's still important that we have some of that capability because it indeed is used for national defense.
Sure.
Um,
Well,
so.
just as a and I'm no metals expert, obviously, but just it makes no sense to me to be completely dependent on recycling of material. You have to be able to something like a commodity that's so critical to the overall industry. You got to be able to produce it from raw materials. You can't just rely on recycle. What happens if you don't have enough incoming scrap? I mean, it just seems to
Well,
me a
that's right. You
short.
could probably do a whole podcast on that subject also, because we're starting to see some weird things happening in the recycled markets as well, right? Where there's such demand for recycled goods that now the price of the recycled product is kind of in some cases rivaling the virgin material. We see that on the aluminum side,
Wow.
where the recycled content's more. Yeah.
Yeah. So let's back up for just a minute because I know you've been in the metals game for a long time, but as you think it's a commodity or when electricity is not a commodity, but it is a commodity and it obviously gets very specialized with different types of metals and you specialize in getting price discovery for all of these, some of them fairly obscure. But is it different? Do the commodities, the metal commodities behave differently and are they traded differently? Is the price discovery different than what you'd see in corn or soybeans or hog bellies? Or what's the difference in the commodity markets and how they work? Or is there a difference?
That's a great question. So I think it comes down to, I would say I haven't studied the corn chart or whatever to understand like how it compares, but I would say that any commodity that can be traded on an exchange shares inherent characteristics with other commodities, right? So
Mm,
that there's volatility, there's enough liquidity to kind of move the price. Things like news announcements and how traders interpret those announcements can be shown in the price action of those commodities. I think there's a lot of similarities, hogs, corn, soy, cocoa beans, they share some commonality and at the base level in terms of being exchange traded. Where things are really different, I think in metals markets in particular, are for what I call the non-exchange traded metals and the less liquid markets, for which there are so many. And that I think is what makes metal markets, well, first of all, from my vantage point, much more interesting, but a lot more complicated. And I'll give you a great example because we were talking about this just yesterday. We're doing some work. We're working on that open project with DARPA. This is publicly available, where we're essentially mapping the nation's critical minerals and developing price forecasts and structural prices for that. And one of the things that we're looking at is how do I'll give an example. Let's look at antimony, for example. If I were to show you an antimony chart, you would essentially, years ago, there was a higher price, but basically for the last 10 plus years, the price looks like it's traded in a straight line. Now, in a lot of the predictive modeling that we're doing and using a lot of the, latest, predictive models, you're taking essentially price history as a big component of what's in your model. So if you don't have any volatility or any event that's ever happened to that market, you can't model that into the future. And yet, if you look at an antimony chart today, you'll see I'm going backwards, but it would be this way and way up, right?
Right.
That's what happened to the market.
Especially
So
in the past 2 months or so, we've seen the price go up. That was triple or more.
Exactly. So in those markets, we call it, you have to build something else. You have to think about it in terms of event-based impacts. And so, but you have to be careful about not double counting. So I'm a price purist from a macro perspective, meaning I think everything that's in the price, if it's on an exchange and it's traded, everything that's in the price is accounted for in the price. In other words, if you're trading London Metal Exchange aluminum, the 2018 tariffs are in the price. It was factored into the price. So you don't need to actually create another layer of, what's the tariff impact? You can actually look back at a historical price chart and you could see the actual impact of the tariffs on the aluminum price because it's exchange traded. So we don't have that in these less liquid markets, these neodymium, cerium, dysprosium,
Praseodymium, terbium.
there you go, the whole thing. And I'm getting
yttrium, terbium.
tongue-tied here, right?
Yeah, right. Yeah.
So you need another way to look at those markets, and you can't look at it like a commodity trader. You need something else. So one of the kind of innovations that we're really developing is looking at all of, historical data, and I don't mean price data, but just, things that happen, event-based activities, and understanding statistically what's the impact of those things on the price. And so how much of an impact, which direction is the impact? Sometimes it's an up, sometimes it's a down. The market price goes down as a result of it. And then what's the duration of that impact? So this is where it's really different. You have to do that for the metals like antimony and all these rare earths that we're talking about, because you don't have an exchange for which you can come up with like a logical explanation that the market took care of it.
Right, or have a price history to compare or do the predictive modeling on export based on export bans or tariffs or something else. So then what? So then you're then just trying to factor headlines. Then I guess would that be a way you're factoring headlines and news events into that volatility, which has got to. I don't know if it's less valuable or more telling, but it's more difficult to quantify, I would assume.
It's definitely more difficult to quantify. It can be done, and it can be done, using all the data science tools that we have available to us today that we didn't have, 10 years ago, 5 years ago.
Right.
There's a way to do that. But I think that's the fundamental difference between some of these metal markets versus, corn. And maybe there's a few different types of corn, right? But,
but that's a massive, massive market, right? And that's one of the things that you said, I remember the other day, that when you get these massive markets where there's so much liquidity, that is people buying forward and people selling forward, You have the ability of traders and speculators to take both sides of the bet, right? Where if you have
Exactly.
a very thinly traded commodity, then you don't have as many participants, therefore predicting price or getting any assuring your downside risk is much more difficult. Is that am I understanding
That's
the market correctly?
absolutely 100% correct. And I think there's cases where there are some metals that, for example, non-oriented electrical steel, it's conceivable that at some point in time there will be an exchange traded product for it. It's probably 3% of total steel demand. It's not huge, but
Right.
maybe at some point there will be an exchange traded product. But there's other things that are super basic for which there's no price visibility. My favorite is tin plate,
Uh-huh.
your canned goods. There's no market price for that. People look at the tin market. I always laugh when people do this. They look at the tin market to think that'll give them, there's no correlation between tin and tin plate. Surprise. We know that because we're using the tools, the data science that tells us that there's no relationship between tin and tin plate. So, what else does tin plate relate to? And that's part of how we do what we do is to understand what else does it relate to, what are those other relationships. What we're also learning is that a lot of metals help us understand the price movements of other metals. For example, copper can be predictive of aluminum prices, and revealing one kind of relationship that's out there, but then those relationships change over time, so you have to monitor that too.
So does
um,
it go the other way that aluminum also predicts copper, or is it that they move
no.
in tango?
I have to actually look it up, to be honest with you. I can't even, I know there's a correlation. There's a pretty high correlation between the two. So they
Well,
tend to
so
move.
so
Yeah.
you, but you mentioned I liked your idea of a price purist. So you're saying that supply and demand matter, yeah, and we talked about this as well. Supply and demand matter, but you're looking at the price as the pure indicator of what Mr. Market is saying, right? This is what Mr. Market is saying about this commodity at this time, and
Right.
what it's saying for that roll of aluminum or whatever it is in March of 2027, so that when you say you're a price purist, I think that's I haven't heard that expression before, but what you're saying is, look, I only care about what the market is telling us. Is that a fair way to say it?
Yeah. And I would say, like, I think of like price purist a little bit as on a continuum. So again, where we have exchange traded metals, I'm a price purist because there's so much liquidity in those contracts that all of the news is factored into the trader's behavior. And that's
Hmm.
really what we do. That's the piece that we offer. And by the way, that's unique in the metals industry from a market intelligence perspective, not for the hedge funds, but for industrial buyers. They don't think about markets like that. And the reason we began looking at markets this way is because everybody who was looking at the markets using supply and demand was always wrong on their forecast, like massively wrong. And I vowed I didn't want to be that speaker that came up into a room and said, "Boy, I sure got that steel price forecast wrong." I don't want to be that person.
Right. Yeah.
So
And,
from
and
that,
and if I'm making washing machines, I mean, you're speaking about original equipment manufacturers. I assume any kind
yes,
of manufacturer, and I'm going to need copper. I'm going to need steel. I'm going to need different types of this. I don't really care whether there's been a revolution in Chile, or you care if to protect yourself on the price in a year and a year and a half,
that's
and
right.
you're going to go out into the marketplace to hedge your risk, right? So, and
Exactly.
in that regard, I see where you're going with this idea of the price purist. Is that, look, you can tell me all the headlines in the world, tell me what the history is, tell me how things function, and because that's the other thing I think you mentioned, or I know you mentioned, it's these relationships of prices to other prices that is the telling factor in many of these cases. Whether it's, you mentioned money supply, inflation rate,
That's right.
GDP in China. There was something interesting in the IEA coal market report that said that, in fact, electricity demand in China has exceeded the rate of growth of GDP, which
Mm,
they're very closely correlated, right? GDP and
right.
economic growth
Correct.
are very closely correlated with electricity. But here's the IEA saying, well, actually, their electricity demand is exceeding their GDP growth because they're doing all these other things. So, where was I going with this? I'm sure it was somewhere positive, but I'm.
Yeah. Well, I think we're talking about, just the notion of like being a price purist. Now, where you have to start relying on, so, I think about being a price purist versus relying on fundamentals as the continuum, if you will. So the less
Fundamentals,
liquid
and the fundamentals in this case mean what? I'm sorry.
supply and demand, just looking at
Okay.
supply and demand. So
Okay.
the less liquid the metal is, the more you have to look at fundamentals because you don't have a market that you can
I see. Okay.
rely
Right.
upon.
Right.
So,
So if you
again,
need neodymium, you have one supplier, which is China, and they're going to go up, they're going to go down. They, who knows, right? Because it's going to depend on weather in the weather in China in that certain area maybe slows mine production or something. So that's
whatever
not
they
a
edict they commit, right? They can make just some proclamation like we're shutting down for air pollution and, then the price might go up or whatever, So it's more subject to the supply and demand fundamentals. So what we're learning is that the more kind of less exchange traded, less liquid metals have very different characteristics from a predictive analytics
I
capability
see.
and
Right.
the more liquid metals.
Gotcha.
And so
Uh,
the solution back to kind of, if we're coming back to like, what's the solution for the United States in terms of the weaponization of these metals is that we can't use the same solutions. We're not going to be able to create, quote, exchange traded neodymium contracts because it's just too small. I mean, some of these metals we trade a total of 150 tons a year in,
right.
that's our total consumption versus
Whereas steel would be how many
oh
tons?
my gosh, 100 million tons of
Right.
steel, or, is
Yeah.
the U.S. ish for the U.S. So, and that's where, we have to kind of switch the approach that we might take when
Gotcha.
these markets. So,
Yeah.
interesting.
One quick station break. My guest is Lisa Reisman, my new friend, Lisa Reisman. She's the founder and CEO of MetalMiner, and you can find her company at agmetalminer.com. That's agmetalminer.com. Let's talk about copper. This is one of the things that I'm also fascinated about, and I was in Chile in October. I was invited to speak down there at a mining conference, and yes, there's a whole universe of metals, and copper is clearly a strategic metal. It is also critically important to GDP growth. And what I heard in Chile after, giving my view from, Texas, and not as a metals guy, not as a mining guy, but someone just looking at the macro, world of energy and power, that I finished and there are all these, and I've talked about these predictions that copper demand is going to double between now and 2050. And I asked these Chilean guys, well, can you double? And they said, double? Hell, we're doing all we can just to stay flat. And this is in the world's biggest copper producing country. So back to my question, it's the background for the question. There are all these bullish calls on copper. I think it was in 2021, Goldman Sachs said copper is the new oil, and copper prices since then have been effectively flat. Now, they've gone up some, but they've been flat for the year. So first question is, you're a price purist. Well, why hasn't copper price gone up given all of this supposed looming demand? Why is this not? Why isn't it going up much faster than it has so far?
Right. So I think that comes down to speculate. There's a lot of speculation for copper. Copper is a much more highly speculated metal. And I think there is a gap between, reality. Traders trade on sentiment, they trade on perception. So, I mean, I think, look, when copper hit 10,000 a ton earlier this year, there definitely was thinking that the momentum was there. But then when the demand numbers don't match the momentum, there's a sell-off, right? So, in some respects, I'm reminded of what happened with nickel. Similar to some of the rare earths, poor performing from a price perspective, people stop making money, they close their mines down, they stop supplying it, and then we're more subject to a price spike because there's less supply available. I think in the case of copper, the copper narrative got a lot ahead of itself in
Mm,
terms of the anticipated growth of and of the demand. I actually think it also got a lot of it wrong. It called for demand in different places. I actually think the data center piece was under, let's say, hyped in terms of the growth and the consumption of metals to build data centers
Right.
relative to EVs, for example, which I think was overhyped. And
Gotcha.
let me caveat that by saying for an American audience, it was overhyped. Maybe not for the rest of the world. EVs are growing much more, spectacularly elsewhere, but just
Right.
not in the US. So when you have these gaps in supply and demand, or rather, you know, the perception of where the market's going to be when it's going to be. That's why I don't think you've seen copper perform the way that people thought it would, because a lot of the hype, I think, was built on EV demand, for example, that hasn't really materialized. And so people haven't bid it up because they don't see exactly when that demand's gonna come on stream to kind of juice that price.
Right.
Um,
Yeah,
so
I'm just looking at the price here. So I'm looking at this is January of 2021. It was trading for $4.07 a pound. Today it's at $4.08 a pound. Now,
there you go.
almost 4 years, exactly 4 years later, something like that. And then I think even, well, I don't know if I'd do an inflation adjusted price on 10 years. It was almost, it was $3 in 2015. So, on an inflation adjusted basis, what is that price? But the narrative again, and to me, as I look at it compared to oil and gas, which I'm more familiar with, it's going to be harder to mine this commodity, or harder to produce it as we look at the
Correct.
future, because the
Yes.
ore qualities are declining. It's going to be more expensive to mine the ore, but it doesn't necessarily mean from an investment standpoint that any of the miners are even investable, because their costs are going to go up too, right? So I don't know. I just find it of all of the metals, it's the one that gets a lot of the hype. Dr. Copper or this and that, but it's just one that seems to defy the common wisdom about looming demand.
Right. And I think that a lot of this is the case in mining for metals and that type of thing, is that sometimes you're investing in the mining capability when the market is awful.
Uh-huh.
Um, you're hoping to ride a wave somewhere in the future. And again, copper's speculative. It's and I don't think the demand has met what expectations were. I mean, I think it was Goldman Sachs that called for $10,000 copper. Now that I've heard 50,000 from people.
Yeah.
But I want to mention one more thing that's always
Sure.
happened. I think nickel gives a good example, and that is, I always say this phrase: nothing kills high prices like high prices.
Sure.
People start look. It's oil. There's alternatives to copper. I'm not saying they're as good. They're not. We all can be whining about
Right.
electricity conductivity through aluminum versus copper, but they're companies are always looking at when they are faced with high costs. And the famous example is when stainless steel hit 55, or nickel hit $55,000 a ton, and stainless steel prices shot through the roof in 2008, 2010. What happened? A bunch of producers began looking at, or I'll say producers, but appliance manufacturers began speccing in non-nickel grade alloys. You want to know why the magnet doesn't stick on your refrigerator anymore? It's because it's 430 stainless, which is low nickel, versus 304 stainless, which is what everything used to be.
Huh.
So there
Oh,
is
so
always,
that's why the magnets don't stick on the top, on the front of my
that's
fridge.
right,
Or I was wondering whether it's aluminum, and I can't tell. I don't know. I don't know
stainless
how.
steel. It's 430 stainless is on your fridge, I think.
Yeah,
Uh,
it sticks on the side, but not on the front. And I get,
okay.
so this is the new fridge, which I like, but I was wondering, well, okay, is the front aluminum, or why is it? But anyway, now you're telling me something I didn't know. It's just a lower or different grade, perhaps a different grade of stainless steel.
It's a different grade. And this was begot out of, the phrase necessity is the mother of invention. So when prices are so high, appliance manufacturers started developing alternatives and looking at what can we do, what products can we substitute out. By the
Yeah,
way, companies do that all the time.
sure.
So
Because
that's
they have to, and
because they
cure
have to.
the cure for high prices is high prices, and the cure for low prices is low prices. Right? This is the old axiom in all of these commodity sectors. So,
Exactly.
do you have a favorite metal?
Well, I came from aluminum, so I'm a little more partial to aluminum. So I would say aluminum for me. I have colleagues that have other favorite metals, but
So when
No,
you have a soda can or something, does your mind think about the price and what grade it is, or is this,
yes.
what does that look like? How do you think about it?
Yes, it used to be where I'd drive around and you'd see like different, cars or trucks. I'm like, ooh, there's a this, there's a that, and I'm pointing it out to my kids when they were little, and
Oh, you would point out what kind of aluminum is in a different vehicle? Oh, now that is
yeah,
geeky. That
or
I
like,
kind of I kind of love that. That's great. And this is one of the keys for with the Ford F-150, right? They went to an aluminum body that was
exactly.
a breakthrough in lightweighting, but it was also required a
Exactly.
different kind of metallurgical advances and also in welding, which aluminum's hard to weld, I understand. Or
Correct. Correct. Yes. So
so,
that
but
no,
not the cans. You're not looking at the cans. You're looking at the cars.
you know what? We look at the cans too. So I mean, we look at all of it, and sometimes you look and you're like, huh, that's interesting. So I've moved to all metal water bottles, of course.
Aha, right. Um, so, just a few more questions, and this is great fun. I'm really enjoying this. I'm learning a lot.
Same here.
One of the things I've asked, and I've talked with hedge fund guys and different people, investors, and talking about copper. And one of the things that a friend of mine, he did an analysis, Dave Pointer did on metals markets, and we looked at copper as a specific commodity and what's going on there. And his conclusion was, well, it's tradable, but it's not investable. So here's a question that I like to ask. Now, you're not my financial advisor, you're not my fiduciary, but just assume, let's play a game here. I give you a check for $10,000 and I name Lisa Reisman as my fiduciary. And I say, I want the most return on this $10,000 in 10 years when I'll be 74 years old. Given your
Mm.
experience in doing what you're doing, and I've heard all kinds of different responses from Argentinian ETFs to gold to Bitcoin to S&P 500 to Berkshire Hathaway. If you were my fiduciary and I gave you that 10 large, where would you put it? What do you think is the area where you'll earn your best return on investment these days?
Well, I'm going to speak only for the ones that I'm invested in, which is gold and silver.
Uh-huh.
So like most traders, probably that's probably the most common answer. My issue with some of the base metals is that I don't see the $50,000 run up. I mean, I've been wrong before. I've been wrong before, so I'm not saying it can't happen, but I just don't see commodities as they're nice midterm plays. They could be good short-term plays. I'm not sure they're what I call an investable asset.
Right.
Um,
But gold and silver are.
I think so because they're a store of value, and that's and so I have Bitcoin, I have gold, I have silver. I'm invested in those, both physical and ETFs of both gold and silver. Those are the only metals that I actually because I've seen so much volatility. I've seen aluminum crash to 1,200 a ton. I've seen it, get to $3,400 a ton. It's always somewhere in the middle there, and I'm not there to play the ins and outs. Like I'm from an investment standpoint. Maybe rare earths, but I don't think so. Actually, I probably wouldn't put any money on that as a group of metals.
Because it's so difficult to figure out where you make an investment. Whereas, so as an investment, gold and silver, because you see they're a store of value, but also they're traded as commodities. And lately they've been soft, right? Because of whatever. I mean, a strong dollar. I mean, who knows? But okay, so I like that. So two more questions then, Lisa. What are you reading these days?
What am I reading? Oh, I read a lot of different things. You might laugh at this. I'm reading a book called Steaming to Bambula. It's a mariner tale by Christopher Buckley. I'm reading it because my middle son wants to get into the Coast Guard Academy. So thought I would take a read through that and kind of understand what life on a ship might look like. It's not for me, that's for sure.
Steaming to Bambula. That's
Yes,
interesting. Christopher Buckley is William F. Buckley's son, if I'm
yes.
remembering correctly. Okay,
Yes,
good.
and a prolific author. And this was his first book written in 1982. So that's also interesting to kind of take a historical look.
Gotcha. And finally, then, what gives you hope? You look at markets a lot. It's a question that I ask a lot of people as well. When they look at the future, what gives you hope?
I think I am amazed at the innovation that happens in this country across the board. And when I say across the board, I think a lot of the hype goes to the big tech and the high tech. But I'm also impressed with huge manufacturing innovations too, whether it be in automation and roboticizing a lot of what we do. I still think America is a place where we need to build things, we need to make things, and I'm always impressed with people that I'm seeing who are part of the ecosystem of building things. So it gives me a lot of hope, actually. And I think our entrepreneurial spirit. I'm an entrepreneur, and I have that spirit. I hope my kids have it, and that we continue on that path. I think that's what made America, a great place to be.
I like that answer. I'll just add that I love factories. I love going in any place where they make things. I just think it's amazing how they,
Super fun.
I've been in foundries and in industrial plants and auto plants, and I just find it all just incredible. And it is amazing the innovation that happens. And on the energy side, people think, oh, well, it's going to be all the innovation is going to be in EVs and wind turbines and solar panels. No. Don't forget about the oil and gas guys. They are having enormous incentives to innovate, and they have, as we've seen very clearly.
Exactly.
Okay, well, let's stop there. My guest has been Lisa Reisman. She is the CEO and founder of MetalMiner. You can find her and all of her price forecasts and subscribe at agmetalminer.com. Lisa, thanks a million for coming on the podcast. It's been great fun.
It's super fun. Thanks so much for having me.
And to all you out there in podcast land, until next time, see ya.